Hello, my name is Greg Mesack. I am NAFCU's Senior Vice President of Government Affairs. Today I am joined by a very distinguished guest, NCUA Board Member Rodney Hood, for a discussion about the state of the credit union industry, the future, and maybe look back at some of Board Member Hood's greatest hits. For those of you who are not familiar with Board Member Hood, and if you aren't, I have to ask, where have you been for the past 4 years? Rodney is actually on his second term as an NCUA board member. He was first nominated by President George W. Bush in 2005, and he was appointed to serve as vice chairman, and then again nominated in 2019 by President Trump, where he was confirmed to serve as chairman and held that role until January 2021. Over his years on the board, Mr. Hood has prioritized regulatory flexibility to support credit unions' growth and is particularly interested in fintech, financial equity, and inclusion efforts, capital issues, and more. Rodney, welcome, and thank you so much for taking the time to sit down with me. We're so happy to have you in the studio.
Greg, thank you all for having me, and I really appreciate all the great work you're doing each and every day to advance a legislative agenda for credit unions.
Thank you so much. We really are working hard. Advocacy is one of our core issues. But another thing that's kind of affecting credit unions that I want to talk to you about, it's clear that the entire financial services industry is consolidating, and the economy is still recovering from the pandemic. Things are still working out. We have inflation. We have all these issues. What is your advice to credit unions, big and small, as they navigate these uncertain economic times?
Well, my main advice to credit unions is to do what they do best, and that is continuing to display the people helping people ethos. Yes, Greg, you mentioned a lot of the issues that we're facing in the global economy these days. You mentioned a lot of the geopolitical issues that we're having, inflationary pressures. In spite of all of the pressures that we're facing today, I'm very proud of the fact that America's credit union system is positioned and poised for great and ongoing success, as evidenced by our most recent call report data. Credit unions now serve 135 million members throughout the United States. Those 4,800 credit unions that we oversee at NCUA and insure, might I add, they now have assets of $2.2 trillion. And while I'm proud of the growth that we've seen in number of members and number of assets, I'm even prouder of the fact that credit unions today have over $1.7 trillion in loans outstanding. Greg, what does that mean? It means that our credit unions are doing what they do best, and that is being there for their members when their members need them. In the midst of today's inflationary pressures, credit unions are there providing loans, as evidenced by that high loan outstanding volume. Loans that the individuals need to get cars to go to and from work, loans for sustainable home ownership, and most importantly, business loans so we can stimulate the American economy. So yes, there are a lot of headwinds out there that we may want to call them, but credit unions by way of their loan outstandings, and also credit unions have had no diminution in asset quality, Greg. Credit unions have had very little charge-offs and delinquencies. In fact, they're historically very low. And one thing that's historically high is our net worth. Credit unions now have a collective net worth of over 10.7%. As you all know, that's almost some 400 basis points beyond the statutory requirement of 7%. So credit unions have the great capital, they have great management in place, and yes, it may look daunting, and yes, we see a lot of financial services providers out there that are experiencing a lot of hiccups, but I'm very proud as the regulator at NCUA, we have the tools and technology that we need to keep credit unions viable.
That's such a great point you make, and I kind of want to dig into that a little bit more. You talked about the strength of credit unions. You talked about the high quality assets, the net worth ratios, but you also talked about that credit unions are still there serving their communities. Considering the recent Silicon Valley Bank and Signature Bank failures, what can credit unions do to highlight the key differences that make the credit union system unique, and also the nature of the credit union system that makes it conservative and also strong and helps credit unions stay in their communities through the ups and the downs? What can they do to highlight that?
Credit unions can do a number of things to highlight what differentiates them from places like Silicon Valley Bank and Signature Bank. And I think the first thing is to tell their story. I think is to talk about what are they doing to really stimulate the economy and how they're putting funds into their members' accounts. As you know, credit unions, as democratically, that's little d, controlled cooperatives, they are in the mission of being there for their members, and because their rates are so much lower than other loan rates that are made available, and also their interest rates are higher that they're paying for accounts, So I think credit unions need to, one, show that they are there with higher interest rates on maybe some of their some of their savings accounts and things like that. What Silicon Valley Bank did, you all, they were not using what credit unions are doing, and that is using good, I would say, financial discipline. They were not looking at their assets and liabilities in terms of duration risk. I would also go on to say that they were not looking at the number of insured deposits that they had. In fact, Silicon Valley Bank, to name one bank of many, more than 90% of their deposits were uninsured. Contrast that, Greg, with credit unions that more than 91% of our credit unions are fully insured and backed by the NCUA. So what credit unions need to do is to talk about the benefits of having federal insurance, talk about the fact that no one that's ever had an NCUA insured account has ever lost a penny. And I certainly want to ensure that we keep it that way. Another thing that we need to do with credit unions is to let them recognize that we at NCUA have given them some wonderful supervisory priorities. Every year, Greg, we at the agency, we let credit unions know what are some of the things on the horizon that they need to be mindful of as they are trying to keep their institution safe and sound. We do that by telling them to look at things such as credit risk, interest rate risk, liquidity risk. Those are the types of things that at Silicon Valley Bank, perhaps it adhered to some of the tenets, and I know the bank regulators have that same structure in place, and I'm not picking on this one bank, but since you raised that question, I just want you to know that credit unions are adhering to a lot of the supervisory priorities that we've laid out for them. They know about looking at duration risk. They know about doing all the things that perhaps other banks should have followed. So I'm proud of the fact that credit unions are not in any of the quagmire that I think some of the Silicon Valley Bank and Signature Bank people found themselves in. I would also go as far to say is credit unions also, to your point about being conservative, they tend to really focus on their local communities. They tend to be in places in the country that are financial deserts. So were it not for credit unions, there are many folks who would be left vulnerable to pernicious and predatory payday lenders. So I'm proud of the fact that our credit unions are there. They're operating throughout the country and they're serving underserved, or in our enabling legislation, we're serving people of modest means.
That is such a great point, and I'm so glad you highlighted the fact that credit unions, because they're conservative, because they're cooperative, they are there for their members. That's such an important point. You know, you touched on risk, and another interesting issue of risk that's come up recently from a lot of the discussions around climate risk. You know, NCUA at one of its recent board meetings just recently put out an RFI on climate-related risk. So. And we've seen other regulators, but a couple of the banking regulators, the OCC and the FDIC, have put out guidance around climate risk. So what is your perspective on the appropriate role of the NCUA as it relates to climate-related financial risk?
You know what, that's something that is an evolving issue for me, and it's something that I know I'm beginning to look at and to really learn more about. Greg, I think the main thing is for us with the RFI, which I did support at the board table because I want to learn what do credit unions need from us to empower them to serve their members. And I think that a number of the credit unions, they care about the environment. As you may know, I used to be on the board of the Nature Conservancy, so I care about conservation. I care about the environment. But I also, as you know, you mentioned in my introduction that I've had 3 different titles at NCUA where there have been vice chairman, chairman, and now board member. Mm-hmm. But Greg, the one thing that has remained consistent throughout my term on the board, and that is I firmly believe that regulation needs to be effective and not excessive. And it's under that lens that I would like to see that our agency, while we put out an RFI, I don't want people to think that that's the precursor to a rulemaking. I'm not a meteorologist, nor do we employ them at the agency. I'm about to go to New Orleans next week for an agency meeting that we're doing. And I mentioned New Orleans. Do the folks that are making loans in New Orleans need me and my team from NCUA to come and tell them how to lend on a floodplain? How do we need to tell them about operating in an environment around hurricanes and things of that nature that rival Katrina? So I definitely think that a lot of the folks who are dealing with these decisions, or whether it be folks making loans to housing stock and mortgages there in California dealing with wildfires, I think people who live and operate in those communities, they know what's best when it comes to mitigating risk and managing it head on. But back to our RFI, one of the main things that I want to learn is what are credit unions seeing in their communities as they look for opportunities to reduce their carbon footprint? you've already heard my regulatory philosophy. What I want to know is, what are some of the impediments that credit unions may be having such that they can't really fully embrace maybe solar lending and things of that nature? For instance, Greg, I had one credit union that called me the other day that said they would like to make some solar panel loans, but they would like for the loan for the solar panels to be commensurate with what we're doing with mortgage lending. That means a 30-year term. Whereas, we can't do that now. We'd like to be able to offer those types of terms. So I'm hoping that we're going to learn things like that. How do we maybe have some rulemakings around paving the way and empowering credit unions to do some of these tools? Also, the Department of Energy. I'm very proud of the fact that they have a multi-billion-dollar fund that credit unions can participate in. So we want to see what are some of the ideas that credit unions have around reducing their carbon footprint, making loans and things of that nature. So it's learning. I can easily see us maybe doing guidance and best practices, but again, I don't think that climate, the RFI, should be misconstrued for future rulemaking. And also, I would just say, Greg, for society as it is, I think we're still learning. I know I'm learning, I'm evolving. I did, for the first time, just have my first electric car. I was able to rent a car not too long ago, and it was a fully electric charging car. While it was lovely, but once you drive 2.5 hours, you have to charge it again. And I have in the mindset that I've had, as most people I would say in America, that you pull off the interstate and you fill it up. Well, that's not the case with the electric car. I found myself in small towns looking laboriously for places to charge the car, and then also I found that you just don't charge it in 10 or 15 minutes. I knew something was wrong when the people charging their cars beside me were unpacking picnic baskets and the children were bringing out their nets and things like that to play badminton. So I'm not sounding like the Grim Reaper, but I want folks to realize that, yes, it's important that we look at some of the technology that's there. And yes, I certainly want to do all that we can to keep our planet safe and sound, but at the same time, we need to recognize that a lot of our infrastructure is not perhaps where we want it to be for there to be full-blown adoption of a lot of the types of tools and things that are on the horizon. So yes, it's great about electric cars, but just make sure that we understand all that goes with having the infrastructure to support you as you're on your journey driving, and perhaps in small towns where they don't have a lot of them. So again, not being negative, but just, again, it's how society needs to evolve to keep up with the ongoing attention that this issue gets.
Yeah, I'm the same way. When I drive, I've got my pit stop down to like 5 minutes flat. Like literally go in, get your soda while you're filling up the car and back on the road. I've always been a little nervous about electric cars as well for that very reason. But shifting focus a little bit, one of your previous questions, you talked about risk. We also talked a lot about supervisory priorities. There's been a lot of focus on fraud in the payment system. Mm-hmm. And one of the NCUA supervisory priorities establishes a questionnaire to help credit unions identify fraud red flags. Mm-hmm. Fraud is such a shifting target. There's always new red flags. What is your perception of credit union performance in identifying and mitigating these evolving fraud risks?
Well, you know what, that is an emerging issue. And one of the things that we've seen a lot with fraud is we all were in a hybrid work environment as we were bringing our examiners back from working at home to now being fully in the branches again for the credit unions when they're doing their on-site reviews, is what we've noticed about fraud. What I have to tell you, Greg, the best line of defense around fraud protection and prevention is having credit unions and their staff members fully engaged, having them fully trained. I think they need to make sure that they're looking at how are they battening down their defense mechanisms, how are they also looking at their systems issues, what are their internal processes around fraud detection. Also, what are the board members doing? How active is your supervisory committee? How are you looking at your governance policies and procedures? Those are all the things that we are helping credit unions identify and address in today's environment. I think another issue that's worth noting is that a lot of our smaller institutions, I know earlier, Greg, I mentioned that we have 4,800 credit unions throughout the United States. Well, we have a lot of small credit unions. I have credit unions that are as small as $300,000-$400,000. So when I talk about internal controls and fraud mitigants, many of them may not have the staffing in place to really embrace a lot of these types of activities. So what we've done at NCUA is we have a fraud protection website. that people can use. If you go to ncua.gov, you can look at what are some of the tools and what are some of the things that you and your credit union can do to really have a strong and effective fraud protection and identification program mechanism. So we believe that credit unions of all asset sizes should have the tools in place commensurate with their size and complexity. But the main thing, that front line of defense, is a strong supervisory committee and an internal fraud control function.
Absolutely. That training is so important because fraud is always evolving.
It is.
You always have to be educating your people.
We have to be educating our people, and we have to stay always a few steps ahead of the bad actors.
Yeah, because the minute you come up with something, they're going to come up with something new.
They are. They are going to come up with new things. But also, Greg, I think another piece that I know that you all at NAFCU have talked about is a lot in the payments space. Mm-hmm. And again, with payments, we are really continuing to monitor what's happening with things around regarding Reg E, where Reg E is certainly designed to help our credit unions if they've had members in other activities that have had fraudulent activity. But we are, with some of the fintech things that we're seeing, we are going to be seeing what happens with CFPB and the courts as it relates to Zelle and some of the others. And as you and I know, fintech can really help us. I certainly am a full supporter of financial technology, but this is one area where we do need to be even more mindful around things such as the payment system piece, and again, with things such as Zelle.
Absolutely, absolutely. Well, you talked a lot about small credit unions, and that kind of leads into my next question. You know, NCUA, they're always so innovative and adaptive, and they recently created the provisional charter. You know, that provisional charter aims to make the formation of new credit unions easier, but ongoing industry consolidation remains a challenge, and that will likely require additional strategies to address the consolidation. It's driving the industry. How is the NCUA thinking about the field of membership in a broader sense? Is there any desire to revisit the concept of online facilities or other tools we can use to help credit unions grow, and so that the consolidation is less of a pressure?
Well, you know what? One of the things that I really was delighted to work with my board members on in 2021 when I was still chair was around how do we expand the service facility, especially if there are multiple common bond credit unions. As you know, one of the things we were able to do was to allow those credit unions the opportunity to adopt underserved areas without having to build a costly new branch facility. One of the things that I think really will continue to pay dividends from that policy-making decision from the board is that credit unions can now be a part of the shared branching network, and you no longer have to have an ownership stake in that shared branch. You can still have access to that and count that as one of your service facilities. Greg, you may recall that I really did, during that meeting, I really did want this technology to be considered as a service facility. So while we were not able to do that, I think, again, the fact that we can have the automatic teller machines, the ATMs, the video teller machines, those can all be considered as a part of the service facility. And one of the other things that we've recently done, Greg, is that we have tried to simplify the process for creating new credit unions. As you mentioned, the provisional charter. The provisional charter rule that we just discussed at the last board meeting, it's always trying to address the chicken or the egg issue. You have a new credit union group, they want to start, but then they can't really get a lot of the funding because the people say, well, hey, have you gotten your charter yet? So now if you've been able to show that you're on the pathway to having a viable, sustainable credit union, then we're going to be able to work with you to give you that provisional charter. And I think that's going to be really helpful. One of the things we haven't discussed is that I am very proud of the fact that over the past year and a half, we have chartered 6 new credit unions. We've just chartered a credit union to an African-American sorority. The Alpha Kappa Alpha ladies have created the members-only credit union. Another group is a group out of New Mexico area has gotten a credit union for a tribal land. We have an Episcopal church that has invested in a credit union in the Bronx of New York. It's the New York Episcopal Credit Union. And what I love about that credit union, it was spawned and created by Alexander Hamilton's church, Trinity Episcopal Wall Street. So they were one of the funders of that. So that's really remarkable if you think about history in Hamilton, with us having just celebrated Independence Day. So the provisional charter is important, but I want you to know that a lot of the credit unions out there are not just simply waiting for more provisional charter activities. Some of them have already hit the ground running with the 6 that have been created. And also, I just want you all to know that we are trying our best to simplify the process for creating a new credit union. We're trying to make it possible, again, to streamline the application process, trying to get a lot of that on our website, such that when you are wanting to create a new institution, you can have like a cafeteria style approach. Well, gee, do we want to do this? Do we want to have a single common bond? Do we want to have a community charter? So we, through our Office of CURE, that stands for Credit Union Resource Expansion, they are looking at these issues. They're marshaling a lot of resources to the credit union. So I just hope that we have new credit unions coming into existence. And Greg, if I can, we're talking about provisional charters and things of that nature, but you also asked me earlier about small credit unions. I want you to know that we have dedicated resources to our small credit unions. We are investing in them through grants. We typically have provided grants to our community development financial institutions and our low-income designated credit unions, but now we're making those grant funds available to the MDIs. And those are funds that can be used for technical assistance, cybersecurity. I talked about fraud protection and identification. Maybe they can invest in some software and tools along those lines. We also are going to be looking at a different examination style system for our smaller credit unions. That means a tailored approach to looking at the risk for assets and credit unions, looking at them not as a one-size-fits-all approach. Not that we've ever done that, but I sometimes think the smaller credit unions need to know that we are coming in with a laser-like focus on how do we look at them and have a more tailored, principles-based approach. So we're really excited that our examiners are going to be using that framework. And also with their MDIs, as you know, we do a lot of comparisons. We're going to be comparing the MDIs or the MDIs as opposed to having the MDI that's using a peer group that may be multi-billion dollars. So we're looking at, again, how do we invest in these small credit unions? How do we keep them viable? Yes, there is a lot of consolidation in the industry, and I want to make sure that if the consolidation makes sense, then yes, if that's a board decision, but I don't want there to be consolidation because of maybe we have burdensome rules and regulations with which they're having to comply. I certainly hope it's not because of our policies. Now, if it makes sense for them to merge because they're looking for scale and things of that nature, well then we don't want to stand in the way of that. But if we can reduce regulatory burden, if we can empower them, as you know, I'm certainly one that believes in empowering credit unions such as through CUSOs and broadening out their abilities to work with CUSOs and through financial technology. I think one of the things that can really help small credit unions, in fact, even larger ones, is how do we use technology as that force multiplier to help those 135 million members have access to 21st century financial products?
Well, you touched on technology. It's like you knew what my next question is going to be. So now that the Office of Technology and Access is up and running, is there a plan for the Shark Tank style fintech panels you mentioned previously? We're all really interested in this.
Yes, Greg, there certainly is. And I'm sorry if I'm really getting too excited about this, but imagine that you've had a dream for 3 years and it's finally come to fruition. Greg, you may recall from the moment I took the oath of office in April of 2019, from having worked with a few Wall Street firms, I knew what the force multiplier was and partnering with fintechs to drive results and member benefits. So because of that, I was able to work with my fellow board members to create the Office of Financial Technology and Access. It has now been launched. We have a leader of that group by the name of Charles Weiss, who's no stranger to you all here. Charles Weiss used to be the head of banking and credit unions for the state of Kentucky. In addition to that, he's had stints at the FDIC and Federal Reserve. But what I'm excited about with our new Office of Technology, it is going to be looking for opportunities for credit unions to partner with fintechs to help them get better data and to use predictive modeling to anticipate member needs, to not only just meet their needs, but to exceed the member expectations. How do we also use some of those tools, to your point, around the fintechs, around a Shark Tank? So yes, you know that I continue to believe that financial inclusion is the civil rights issue of our day. I continue to believe that credit unions should be that port in the storm for helping the 40% of American households who can't obtain $400 in an emergency, or those 26 million credit invisible individuals. So credit unions, by partnering with fintechs, I think they can help serve vulnerable populations. So yes, we are working soon to have a Shark Tank-like event where credit unions and fintechs can gather. As you know, Greg, there is a lot of funding that's coming to venture capital to support credit unions and fintechs, so we'd like to have some of those investors there. But Greg, in addition to doing a Shark Tank-like event around financial inclusion, I'd like to see us maybe then pivot and do a Shark Tank-like event on payment systems and things like that, and then do one on digital identity. As we are continuing to see a number of new members in credit unions, how are we doing to provide them with a seamless, frictionless opportunity when they become members? So how do we use technology to do that? So looking at some different type of Shark Tanks, but also we want to, as regulators, we also want to do some regulatory types of things as well, such as how do we at NCUA bring technology into our processes? One such way is through the merit examination system. There's our measurement, examination, and risk identification tool. Greg, that replaces a 35-year-old supervisory tool that most of the financial regulators have been using in Washington for the past, again, 30-some years. So NCUA is the first federal financial regulatory agency to have a streamlined, cloud-based tool for doing our exams. So that's one way that we're investing in technology ourselves. You're going to continue to see us do maybe things like a tech sprint. One of the things I like to do is we talk about data quite a bit. Well, how do we get real-time data? When I give you the numbers around statistics and performance, that is quarter-end data. I'd love to have data that was just fresh off the press in real time. So that's aspirational, but would certainly like to pursue a tech sprint. And another thing that we are not hearing, Greg, in America as much as when I meet with my colleagues in the UK, and that is the regulatory sandbox. How do we bring a sandbox concept to the credit union system? And for people who may be wondering what that is how do you work with a fintech tool? How do you help them address the regulatory impediments and barriers before they go live, before they try to scale their product to get breadth and depth with a member experience? So how do we bring in those types of investors to work with them on the regulatory map, looking at things such as regulatory and compliance, address it in the regulatory environment before it goes live? And what you gain by that is you're not going to have someone coming to market with a tool and then it's fraught with regulatory barriers such as not complying with HMDA and RESPA and things of that nature. So that's another thing that we're looking forward to exploring in the days ahead. And then I'll just conclude with another thing that we're doing with the Office of Financial Technology and Access, and that is the FinTech Discussion Series. Prior to hiring Charles Weiss, I took it upon myself to make sure that we are continuing to educate the industry and our colleagues at NCUA. What are some of the fintechs of today doing? So every other week, we bring in a different fintech to educate us on how are they entering the market, what are they doing around serving some of the 135 million members to which they have access. And it's not to micromanage the fintechs, but if anything, it's for us to glean insight such that when that moment of truth occurs, and what's the moment of truth, Greg? Is when the examiner goes to examine the credit union and they learn about a fintech, well, now they can say, oh, I've heard about this fintech. We know what they're doing, as opposed to examiners being a little risk averse, and if they don't know what's going on, they assume it's nefarious and want to discontinue it. So just as I mentioned earlier, we're continuing to learn as these new tools evolve. You expect your regulator to keep up with it. So that's why I'm glad that we have the FinTech Discussion Series. All of that is something that I really am excited about, and I think you all will be as well as you learn more about what's going on. In fact, perhaps Charles Weiss should maybe be able to come on your show one of these days.
I think we absolutely need to have him on the show. And when you get one of those Shark Tank days, I'd love to be able to watch that. I think it's going to be really, really exciting. I think that innovation is just going to be so empowering for credit unions.
It certainly is. That's why I'm supporting it, because without it, Greg, I don't even know if we have a credit union system to really fully regulate and really have in our midst if we are not providing those 135 million members with the tools that they need, and not just need, but that they almost in many instances demand.
Yeah, if they don't have they demand certain technologies and credit unions don't provide it, those folks will go somewhere else.
They will, exactly. So that's why I'm making sure that we at NCUA are giving them, again, that empowerment and flexibility.
Well, talking about empowerment and flexibility being the key word here, You talked about regulatory burdens and impeding the growth of credit unions. Well, there's also legislative barriers to growth of credit unions. And one example you gave a little while ago was solar loans. We have the loan maturity cap. It caps loans for federal credit unions. And there's a number of other old provisions. And it's important that we update the Federal Credit Union Act to remain flexible, to allow credit unions to serve their members, to fill those banking deserts, to provide the services that people demand. What do you think are the top priorities for legislative improvements to the Federal Credit Union Act?
That's a really good question, Greg, and especially one that I would anticipate from you, seeing that you're the one that's really helping America's credit unions really navigate the legislative environment. Where you mentioned the one piece around the solar lending and how we want to do more, but the loan limits are there. Another area that I care about, you all, that I think is around small business lending. As you all know, I'm a former commercial lender. I believe that credit unions are uniquely positioned to be there to serve the small business needs of America. Nowhere was that more evident, Greg, than when credit unions originated over 310,000 paycheck protection loans. That's right, credit unions did over 310,000 PPP loans. But what concerns me, Greg, and I think we need a legislative fix for this, is credit unions are capped, especially our federal credit unions, they're capped at 12.25% of their asset size is the number of loans in the aggregate that they can make to small business owners. I think that cap needs to be removed. I would like to see credit unions not have any restriction on their desire and their demonstrated ability to serve the small business community. So right now, credit unions that are getting close to the cap, they're having to look at loan participations, or in some instances, they're just frankly not able to provide the small business lending that they'd like to. So I would certainly love to see that legislation effort to remove the 12.25% cap, allow credit unions to serve those underserved, marginalized businesses, or even for that matter, some of the larger businesses. No matter what the asset size is, these are credit unions that really should be able to serve their members. Another piece of legislation would be our central liquidity facility. I know when you were asking me about Silicon Valley Bank and some of the other issues that we saw play out in March of 2023 of this year, liquidity was a major issue that they were lacking. And we in credit unions, I mentioned the strong capital, where credit unions also have good liquidity, but I want them to continue to have strong liquidity, whether it be through access to the Federal Reserve discount window, or through the Federal Home Loan Bank, or through our own central liquidity facility, the CLF. As many of you all may know, and I know you know this, Greg, because you worked on it very diligently, a lot of the provisions that we had around strengthening our CLF, those provisions sunset after COVID. So now we're no longer able to have over 80% of our small credit unions a part of the CLF. As you know, the corporate credit unions were able to really step up to the plate and help make sure that everyone had access to liquidity. That is a legislative decision. So if we could really, not that I can lobby, but if you all can advance the legislative proposal around strengthening the central liquidity facility and making a lot of those temporary provisions more permanent, I think that would be a really game changer for the industry, and it would certainly continue to strengthen the NCUA, because it gives us other tools that, again, that creates opportunities for resiliency and sustainability.
I agree completely. And, nothing to your point highlighted that more than the liquidity scare we saw around Silicon and Signature Bank, and just highlighted why we should have reauthorized that earlier. And
exactly.
We're with you. NAFCU is pushing so hard on that. It's so important for all credit unions. We want to give people confidence in the system, and that's a great, easy way to do that.
Exactly. And in fact, Greg, and we're in fact doing a lot of outreach. You may recall it was when I was chairman that I wanted to elevate the title of our CLF. We used to have a director of it, but now we have a president of the Central Liquidity Facility. He is doing a number of outreach sessions and letting folks know that, yes, this is a tool that NCUA has, and also letting folks know there is nothing wrong with using the CLF. It used to be considered the lender of last resort, but if you have a liquidity need, we want to be able to meet that need, and we are so fortunate that we have those types of resources. So yes, liquidity like capital, those are the two fundamental bedrocks upon which our credit union system rests. And I'm just happy, though, that we still have the tools today. But again, I would like to see CLF more permanent things to take place in the days to come.
We keep coming up with a list of people to have on our podcast and other shows. The president of CLF would actually be a really interesting discussion.
Yes, his name
as
is
well.
Anthony Crepetta.
All right. Well, another thing you mentioned, and kind of going back to nuggets, like you've read my questions in advance here. You talked about the merit system. The NCUA has overhauled the data and information sharing platform for exams through the implementation of merit. But are there any other improvements to the examination process the NCUA should focus on? I think you talked a little bit about this, but I'd like to go more deep depth into it.
Yes, well, I think the main thing is that we're able to focus on is getting the real-time data. But the thing is, we now have a simplified, streamlined approach to doing the credit union examinations. No longer will you have the examiner and the team coming in for weeks upon weeks, but now it's days upon days. And you know what the credit unions have told me, Greg? They've said that when we're doing the exams and using merit, we like the fact that you may not be with us for a week or two, but we still want to see the NCUA examiner. So there's still something to be said about face-to-face and being able to talk about ideas and opportunities. Another thing, Greg, when it comes to the technology and everything that we're using with the exam, there is a feedback. There is a feedback loop. So I really would love for our credit unions to let us know what have been your experiences, what have been some of the takeaways, because it is an iterative process. I mean, we've just rolled out the merit system. It's still being demonstrated. We've gotten it rolled out in most of the country, but people are still learning about it. So those of you who've gone through it, let us know. There is a post-exam feedback. Also, I think it's important to note that we're going to continue to look at ways to modernize the call report. I think I mentioned around tech sprints and things of that nature. That is another thing that we're hearing, is that people would like to find a way to simplify and also just really better use technology regarding the call report. So I think that's one thing, call report and modernization of it. And also the fact that you credit unions, you have an opportunity to let us know your thoughts. And by the way, the feedback that you give is all anonymous. It's all not going back to the primary examiners, but it's just to let us know how can we learn from the process, what would you like to see done differently, and things of that nature. So that's it, but we are using all the data that we can. And again, we do a lot, as you would imagine, with a government agency that's looking after a part of the American economy. We have economists, we have statisticians, we have technologists, we have all the folks in place. And I'm just delighted that we are better optimizing the use of technology to keep our system for credit unions safe and sound.
That's great. You ought to come up with a like Uber style where you can like rate 5-star, 1-star your examiners. Like rate your examiner and you can give them like a 5-star. Just kidding.
We have a really good dedicated team of examiners, and I speak with every new class of examiners. Almost every month I'm speaking to anywhere from 15 to 20 new examiners. And Greg, what you may not know is that it takes about a year to a year and a half of training before that examiner that I just welcomed, it's going to be at least a year before they even step foot in a credit union. So we train them, we make sure that they're getting real world examples and all of that. So they are a really, really good, dedicated group.
That's great. I'm glad you guys put in the investment into them. It's, investing in your personnel is so important. So, a little walk down memory lane. You've served 2 terms on the NCUA board. One could say, you're probably one of the more consequential figures in the NCUA governance in the recent years. And you've seen a lot. You were here during the financial crisis. You were here during COVID. You were here during the Signature Bank and Silicon Valley Bank scares. You've seen and done a lot. What do you feel are some of your biggest accomplishments in your time there? And what do you think some of the challenges are going forward for your successor?
Oh my goodness, what a good question. Well, I cannot take credit for any of the things that I've accomplished. I've just been blessed to lead a team of people who would work with me to bring a lot of my ideas to fruition. And with some of the people that have worked with me, I would say the things that through working in partnership that I really am proud of is, we've talked a little bit about this this morning, and that is the Office of Financial Technology and Access. Again, to go from the ideation stage to bringing it to fruition, that we have an Office of Technology. So now, like many of the other federal financial regulators in DC, credit unions now have a prudential regulator with an Office of Technology. Another piece of that is Access, Greg. And Access, as you know, that was an initiative that I worked with my board and colleagues on. And sadly, what catalyzed Access was the George Floyd tragedy, how we all watched this disregard for the sanctity of life just play out right before our very eyes. And you may recall that I did pen an op-ed in the Wall Street Journal where I called on banks and credit unions to come together to help America heal through financial resources and through financial inclusion. Well, you know what? It's nice to write an op-ed, but I wanted to do something a little bit more demonstrable. So I was able to work with my team and colleagues at the agency, and we created the Access Initiative. That stands for Advancing Communities Through Credit, Education, Stability, and Support. That is a group within NCUA that is working with our MDIs to empower them to succeed. It's working with different colleges and nonprofits around financial education and financial coaching and financial health. It's around helping us recruit. How do we build a mentality around bringing diversity into the agency? And I'm not just talking about racial and ethnic diversity. I'm talking about low to moderate income communities. I'm talking about rural, tribal, differently abled, second chance, justice involved. In fact, Greg, one such piece with Access, we have now begun a recruiting process at Gallaudet University, which is in Washington, D.C. It's a college for the deaf and hard of hearing. Many of those students, though, they may be deaf and hard of hearing, but they come out as accountants and engineers. So we have hired several examiners who are from Gallaudet. So yes, we're making the investment in the technology and the captioning that it takes, but again, it is showing that access is important, but Access is one of those initiatives. So I'm excited about the technology, the access piece, and Greg, it's intentional that I put the Office of Financial Technology and Access together. So those two are partnering together. So Natasha McAdoo runs the access component. And what should happen? If we are deploying financial technology strategically, it should bolster greater financial access. So again, that is the intentionality between those two departments working hand in hand. I would think the other thing that I've been really proud of, and again, from being able to work with my board members and others, and that is to really provide CUSOs with the support that they need. Just like I believe in technology, credit union service organizations are also integral to the ongoing success of credit unions. So I was very delighted to champion the rulemaking where our CUSOs could originate loans that credit unions need so that they can then buy them and sell them and participate them out if they need to get additional yield. So I think in a nutshell, I'm just proud of the things that I was able to do that will leave a legacy for the next generation of credit unions. The one thing that I would say is that we're going to always pursue technological change. We're going to always pursue serving vulnerable communities. And I think through the new offices that we've created, the CUSO piece that we have, I think those are the things that I'm most proud of, and I look forward to seeing the next generation of board members continue to perfect upon that.
Well, you should be proud of that. That's quite a list of achievements and something that's going to make a lasting impact on the NCUA and the industry. So we've been really enjoyed watching you as you carry that out, the diligence. You know, things don't happen overnight. It takes work, it takes persistence, and you put in the time. So, you know, talking about time, put you on the spot here for a second. Maybe you will answer this, maybe you won't answer this. Your term is up in August. We haven't seen a name announced yet for you to fill your spot. Should they not be able to confirm someone in time, would you be willing to stay on until your successor is confirmed?
Well, you know what, that is such a hypothetical, and I haven't heard a name. In fact, it's not even in my ballpark to even know what's going to go on. It's my board seat that I've been blessed to occupy. I'm sure the White House is working on that, and it's arm's length. NCUA is an independent agency, Greg, so I would just say that as has been typical for the agency, at least for the past 40 or so years, the NCUA board members, once his or her term expires, they typically have stayed on until the successor has been named by the president and confirmed by the Senate and sworn in. And that can take any number of months, or in some instances has taken a year or two. So I am not going to really get mired down in what's going on there. I'm going to focus more on the fact that I'm still serving out my statutory and fiduciary duties. I'm still moving forward with a lot of the things that I care about regarding financial inclusion and access. And I've just been named the chairman of NeighborWorks America, which is a quasi-government entity that advances affordable housing and home ownership throughout the United States. So I'm going to focus on the things that I can control, and that is just continuing to work with my fellow board members, continuing to provide great oversight at the agency and our insurance fund, and I'll leave what goes on with the political machinations as to who succeeds me up to the powers that be.
All right, well, I've got two final questions for you. First of all, any desire to one day serve a third term, get the three-peat in?
Well, once again, I'm not going to get into hypotheticals, but I would just say to that, although one should never say never unless they're playing James Bond, I would say that I think you all have seen Rodney in many iterations at this juncture as chairman, vice chairman, and board members. So I think at some point there is a reason that we have term limits. There is a reason that we want to have different talent and different folks. So at some point I would just like to maybe be in a position to, if I'm asked to provide advice to maybe future board members, I can do that. But no, I think you've seen quite enough of me with my 2 completed terms.
All right, so the last question. This is actually probably the most important and consequential to our members. You're from North Carolina. You have some barbecue experience. We have our congressional caucus coming up. What's the best barbecue in D.C.?
Rockland's barbecue is the best DC, but I say that not from my perch as an NCUA board member because I'm not at liberty to make endorsements, but I am a free citizen, so when I'm not wearing my business hat, I love going to Rockland's barbecue if you're in DC, but if you're coming down to North Carolina, I have a whole list of places I can send you out throughout the state of North Carolina.
There's a time limit. We can't take that much time. Well, thank you so much, Rodney. This has been a wonderful discussion. We so appreciate your time with us today and the time you spent on the NCUA board.
Thank you for having me. I've enjoyed it immensely. And again, you all have done such yeoman's work in advancing credit union's legislative agenda.
Thank you.